So we're going to start with a listener request this week, and this is a company that Steve and I didn't really know a lot about when we first had a look at it. Probably still don't know enough, to be honest with you, because it is quite a complex business. This is Beeks, Beeks Financial Cloud. I think they're in the process of changing the name to Beeks Group, which is obviously a much better name. Lots of people seem to like the stock. It reported its earnings on Monday and was down 18% on the week following this report. Let's see if we can have a look and figure out why that was. So what do they do? They're specialists in providing cloud computing and connectivity services tailored specifically to the financial services sector and in particular capital markets. Their sort of key selling point is that their infrastructure is incredibly low latency, which is crucial for people who have or need high speed trading. So in essence, they're a managed cloud service that helps financial institutions build, connect to, and analyze data efficiently, securely, and at max speed. So in terms of their financials, revenue for them was up 22% to 15.79 million. So this is the half year for them. So if that helps you out, they report a figure called ACMRR, and that stands for Annualized Committed Monthly Recurring Revenue. Essentially, it's just a recurring revenue. Is how you treat it. That was up 7% to 28.5 million. Gross profit was also up 21%, obviously in line with revenue. Underlying EBITDA up 25%. Actual PBT was about 460k, but that was up 188%. If you wanted it per share, that's 0.47p, so a half a penny essentially per share in profit. Op cash flow jumped 23% to 5.76 million, and they've got about 6.5 million of net cash, just over that. There were some operational highlights in here that were pretty interesting. It was another period of double-digit growth for them in revenue and underlying PBT. Significant exchange cloud contract wins were secured, including the approval and launch of a multi-year contract with one of the largest exchanges globally, with the first customers now onboarded and progressing to plan. This is the NASDAQ, you'll be surprised to learn. Also a post-period win for them with the Bolsa Mexicana, which is the second largest exchange in Latin America. So they had a bit of expansion with some existing customers, including a further extension deal with the Johannesburg Stock Exchange, because they've had really strong customer demand on that one. So they've been trying to sort of quicken the pace of release. Continued investment in product innovation to build and develop the functionality of the Exchange and Proximity Cloud. And another big win just post period was released news today. They've actually signed up a cryptocurrency exchange, Steve, and I was thinking it'd be a rubbish one. It was actually Kraken, which I think is probably one of the best crypto exchanges. I think this is a fairly major win, although I must admit, embarrassingly, they've spelt the name wrong a couple of times in the press release. They've put a C in Kraken, which and there is hints of that as you go through the business. There's hints of, the report doesn't read very well. It's not really tuned to somebody reading it externally to the business. And also there's just smatterings of things like that, things that shouldn't get out into press releases, which is, an amber flag, maybe not quite an amber flag, but getting towards an amber flag. Kraken's press release, Shannon Curtis, who's head of trading at Kraken, she said, could be he, I guess, Kraken has spent over a decade continuously enhancing our infrastructure and technology, but we recognise that many of our clients require ultra-low latency for their trading strategies. By working with Beeks Exchange Cloud, we're ensuring that clients who need high-speed execution can optimise their trading strategies while benefiting from the security and reliability of Kraken. Bit of an endorsement, that, Steve, I think, because Kraken are a bit of a build it kind of exchange. They're a very popular exchange, probably second or third biggest in my brain, especially for retail trading. So for them to go out and buy it and to commend it, pretty interesting. So in terms of customer contracts, they said whilst the revenue recognised today on Proximity and Exchange Cloud booked has an element of upfront recognition. They're actually changing these contracts with new customers to a revenue sharing model, which reflects their confidence in the offerings. This approach offers various commercial benefits, so it shortens the sales cycle because there's no upfront cost to buying it, and it means to higher profitability because you collect on that money for a longer period of time. So the revenue outlook for these contracts is usage-based, and therefore it's a bit more difficult for them to forecast. However, the benefit of this model will enhance the long-term attractiveness and value of these contracts, as obviously, Beeks continue to provide the service. The customer continues to like it. They'll keep paying far beyond the life of the equipment that they give out. So an immediate example of this one would be Kraken. Kraken has a revenue share deal. Beeks' offering will be available soon to Kraken's customer base, which is reported to being around 13 million customers. So quite a big onboarding. In terms of outlook, they said that several of the world's leading exchanges are now in final stages of conversations and multiple other opportunities for them in the sales funnel. And on this, they said, we have once again successfully delivered double-digit growth and increasing profit margins as we grow and scale with some of the largest financial organizations globally. Our unique proposition has the potential to transform the future of cloud technology and capital markets. The regular flow of new contracts and conversations currently taking place with tier one organizations around the world reflects the value of our offering and provides us with confidence in continued strong uptake throughout H2 and beyond. In terms of valuation, when I wrote this, Steve, we were about 207.5p in share price, so £2.07.5, which is down about 26% year to date. My calc gets that to 148 million quid in market cap. I think Google Finance has got this quite wrong. So it's a tiny business, really, Steve. Solid set of H1 results, marred slightly by the news of this one-off increase in customer churn and this shift to a new revenue sharing model for future contracts. But yeah, Beeks are no longer going to receive payment on hardware when they hand over, but they're going to retain the ownership of it, and basically it's going to be like a rental, essentially. They trimmed their full year 26 forecast, Steve, which is where I think most of this fall has come from, and it makes forward valuation, I think, a lot harder to judge. Could be a little bit on the high side, but maybe not. If you think these growth rates stick around for a little bit of time, Steve, the product continues to gain traction and these tier one big organizations keep coming on board, then I think this looks pretty attractive going forward. It's just so small at the moment, Steve, that somebody could come along and eat this up for a sneeze, with a hand down the back of the sofa kind of money. And it looks the kind of interesting offering that somebody will do that to, Steve.
I think that's probably true. I don't necessarily view that as a bad thing per se, although I think it's probably worth being aware that that's what you might be getting yourself into. I like a made-up acronym, or at least I do in my kind of current mood for whatever it was, monthly, recurring, committed, spending, revenue, something or other. Can you I was so distracted by that. Yeah, that's it. So I was so distracted by that name, I actually forgot the number that you said afterwards. Could you just remind me?
It was up 7% to 28.5 million.
28.5 million, thanks. And wait, what were total sales?
15.79 million, up 22%.
Okay, so monthly committed thingammy is a bit higher in that case, which that's pretty impressive. Monthly committed spending recurring stuff thingy for something with 146 million market cap. I was looking at this and thinking, actually, that looks pretty impressive. I don't know. So PE-wise, it looks ridiculous, right? Because a lot of these kind of early-ish stage tech companies do. And this isn't super early. This is signing up real customers and big customers at that. And it's operating in a quite interesting niche, right? So you think kind of low latency is a genuine advantage for everybody. The question is who really needs it in a certain way? And the answer is financial exchanges really need it. And there's only so many of those in the world, but with a market cap of 140, I've got 6.5 million. You don't really need that many of them in order to make a meaningful business out of this. I asked Gemini what their kind of what the competitive landscape looked around this, and it was pleasingly a bit vague in terms of answers. It sort of said, well, infrastructure companies and so on. Like Globant was one that it kind of offered as a competitor. Now, Globant is about 20 times the size of Beeks on a kind of market cap basis. That's fine. But Beeks doesn't need to compete outright with Globant. In these cases, you can sometimes get away with having a more specialized, more bespoke, more niche type of operation where bigger players struggle to kind of get in. And that's the way I think about this kind of business, as well as I think about smaller businesses in general. Of find a space, make sure that market is big enough to justify your current share price, which I think in the case of Beeks, looking at where it is now, it may well be, especially if they've got a clear line of sight. They said final stage conversations towards onboarding some more customers there. So their kind of committed monthly recurring revenue ACMA thing is fairly high, and you don't have to think the margins on that are going to be super, super exciting to get to the point where you think this is in its final form. I think fairly good value. I'm impressed by this, Steve. I'm always a little bit wary of the competitive landscape because I'm not super sure I understand it, but it has the feel of the kind of thing that I'm trying to look at a bit more. I think it trades on the AIM, is that right? Or is it a small cap?
I'm pretty certain it's an AIM stock, Steve. Just on Globant, it was funny you mentioned that they hit my my price target for Globant went off, and the interesting thing about that is I didn't know I'd set one. But year to date down 38.67%. I think I set this price target for Globant like back in 2021 when it was like a couple of $100, and thought to myself, if it ever gets down here, I'll consider it, kind of thing. Well, it's down 60 odd percent since those highs. So maybe Globant is something I should maybe start taking another look at.
I agree with you on Kraken as well, by the way. It's one of the few kind of crypto exchanges that I've heard of. I'm always a little bit wary about the crypto space. It sort of feels to me like it's hanging by a thread some of the time. Trump in the White House will almost certainly be a help in that regard for the next few years. But Coinbase was sort of under pressure not so long ago until more important things came along and distracted everybody. But I always feel like with that one, I would always be kind of sat waiting for something to go wrong, and it doesn't strike me as a sleep particularly well at night kind of operation. But Kraken is a good exchange. It's an exchange I've heard of and know about. So I'm impressed they managed to get them lined up, although it's definitely the same Kraken, not the one spelt with a C.
Well, who knows? We'll have to look up Shannon on LinkedIn and see where they work, because it could be anybody with the amount of times they've managed to misspell the name. But it's not just like a constant either. They've just tried to misspell it. Spell it in different ways all over the place. It was kind of like somebody didn't know how to spell it, but thought if I'd give enough versions of the spelling in there, I could probably blame a typo for the ones that are wrong. So yeah, not the best. So there you go, Steve. Have a look. Kraken Digital Asset Exchange. So it is the Kraken. Shannon is male. So I was wrong with my initial guess.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.